So 1, 2, 3. Sorry for the technical delay. We had some issues, and now I hope it is fixed. So yeah, we will be ready to start in less than just a minute. I'm live. 1, 2, 3. Checking the sound. Checking the sound. All right, 1 sec. 1 second. Let's check the final preparation. All right. I think that we might be live, so everything should be okay. All right, without further ado, let's get started. I'm Stan, and I'm your host today during this session. So I'm senior trading specialist at Exness and also a trader in the different markets, CFDs, futures, stocks, with first trade in 2004. So already 20 years in the previous November. So currently I'm celebrating the 21st year of my trading. So yeah, basically the goal of such session, our session, is to introduce you to the market analysis and market preparation, so that you will get more ideas of how to be more prepared to do your homework. I don't say correctly, because there are no right or wrong answers in trading. There are scalpers which don't care about any preparation, about any homework. But for most people, for most traders, I think that preparation, top-down analysis, understanding narratives, understanding fundamentals makes a lot of sense, because otherwise they would just look at the chart and that's just pointless. They just don't see anything. They start searching for patterns, chart patterns, and end up with just pulling trades in and out, in and out, in and out, without even understanding what's going on. So if you give me just a chart alone without any fundamentals, so I might be okay, but I would be trading much more efficiently if I would see the big picture, the entire picture. Because in my trading, I need to be in sync with big market participants, for example, commercial banks, hedge funds, investment companies. I need to see what they see, what information do they react on. All right, so without further ado, let's get to the terminal. So, and what I want to show you in the first place, so let me just log into the Exness terminal, because I will show you a couple of interesting features that you might have overlooked or you might not know about in the first place. So if you log in into the Exness, sorry about that. Yeah, here it is. So that's my personal dashboard. One last thing. So let me get back. All right, we're here. So here we have the so-called Analytics tab. So once you get inside of your Exness personal account, you get Analytics tab. You have 3 features here: Economic Calendar, Analyst Views, and Market News. So we are starting our analysis with Economic Calendar because that's the track of the major economic events, global events that's gonna happen during this week. Also, we have Analyst Views. These are proprietary views of independent third-party analysts, which is provided by Trading Central. Trading Central is an analytical company which broadcasts views of professional technical analysts, and it is available by the link Analyst Views. So give me just a sec. So this tab will load. And the Market News. Market News is essentially the news feed, which is give it just a second with my internet connection. Okay, here it is. So Analyst Views, right? So what is that essentially? So that's not a vague analysis which shows you, okay, market can go up or it can go down. They give you the exact destination, the exact targets, stop losses, and all which is needed for building a good trade. Well, not all ideas might work, so you need to understand that market is uncertainty, right? Is associated with a high or increased uncertainty. But these are technical analytics, so they build the narrative, they build the ideas, so you can follow it or not follow it, or you can use it. For example, if you're good at fundamental analysis, you can use their technical analysis to build your trades if you like. And also we have an economic calendar, which we start with. Other than that, I also use Trading Economics /calendar. So that's an independent analytical resource, because sometimes it's convenient because it provides consensus forecast, which is, I believe, needed for analyzing the news. But nevertheless, let's start with economic calendar. So we're starting with American dollar in the first place. Here it is, economic calendar, USD. So I'm starting with USD, with American dollar related news, because it's really what we need for understanding the big picture. So today is February 25th, Wednesday. So the first, I believe the most important report, it's Tuesday, sorry, today is Tuesday, of course, so I'm leaving already for tomorrow's. Yeah, today is Tuesday. Today is Tuesday, so there won't be any substantial news coming in on Tuesday. So tomorrow that will be NVIDIA report after the market close. It's not showing here, but if you scroll down to Thursday, for example, February 26th, you will see that it will be included here, NVIDIA earnings report. What does that basically mean? So that's the largest company, AI-related company, and it sets the tone for the entire market, for the stock market, for crypto markets, for other markets as well, for Japanese yen, for example. It sets the tone for the sentiment. And we will know the reaction of the market on NVIDIA's report. So that might be positive or negative, we don't know that yet. Analysts expect to be positive, because every time with the quarterly report, NVIDIA has been beating estimates. And maybe this time won't be the exclusion, but let's see if a report will be good or bad. So if the report misses expectations, so that might give the negative signal for the market, because the market, as you see, especially S&P 500 index and NASDAQ, well, let's see S&P 500. So you see that it was declining throughout the last week. The same was with US tech, which is NASDAQ. It was also declining for the last week. So the sentiment is kind of negative right now, and that's why NVIDIA report is really challenging. So the market will look forward into the publication of NVIDIA, because it's kind of the last hope for the market for recovery. So I don't say the last hope, it might not be the correct representation, but it might actually reshape a little bit the current trend. So, okay, after the market close, early in the morning, February 26th. What about Wednesday? On Wednesday, we will have consumer confidence for the United States. Not that important indicator, but still pretty important. But I believe the more important indicator will be published on Thursday, which is GDP, quarterly GDP for the United States. Where it is. So building permits. It's 27th. Yeah, it's gonna be quarterly GDP for the United States is gonna be. So let's watch at the Trading Economics, because I think that we will have slightly more in-depth information here. It's represented in the form of such a graph, which we see here. All right, so now is Tuesday, so let's go to Wednesday. So you see that important news are published here with the red field here, red field, so that's convenient. On Wednesday, there are no really important indicators, but if we scroll it down, durable goods orders, GDP growth rate for the second quarter, Thursday, here it is, by the way, it's represented here in on Thursday 27th. And speaking of Friday, it's, I think, the most important day throughout this week. So because we will have publication of PCE indicator, personal consumption expenditure, the so-called Fed's inflation. So that's the most important indicator along with GDP. But let's start with GDP. So let's scroll it up a little bit. So GDP is on Thursday, and here it is. So let's click here. So it is the chart. So if we put forecast here, we will be viewing the forecast for the previous quarter. So that's, we already had the estimate, but Currently, we'll have the consensus forecast. The consensus is 2.3%. The previous was 3.1%. The consensus is 2.3%. So GDP is published in 3 iterations. The first is a preliminary forecast, then it's first estimate and the second estimate. And now we will have the second estimate. So basically, that's the third iteration. How is that calculating? So basically, first of all, preliminary report, they publish it with the preliminary data, then they get more data, they add it as a first estimate, and then the second estimate. So tomorrow will be sorry, on Friday that will be on Thursday, sorry, it will be second estimate, right? Second estimate, 2.3%. So that's for the fourth quarter of 2024. If the second estimate will be the same as expected, 2.3%. So I don't think we will have any big changes in the market, any big shifts in the market. So that's for Thursday. For Friday, as you already know, that's gonna be personal consumption expenditure, which is the Fed's inflation, which is known as a Fed's inflation. That's a really important indicator because Federal Reserve really tracks this indicator for decision making, for making decision about the interest rate. So again, we have a bunch of publications for Japanese yen, but the most important, as I've said, is core PCE indicator. Let's click it here. Let's click it here. Let's put forecast here. And yeah, so it's expected to stay flat a little bit, at least for a while. The consensus is 0.3% with forecast of trading economics of 0.4%, so slightly higher than expected. So consensus is 0.3, previous is 0.2. So basically inflation might be staying at the same level. To get the idea of expectations of the market, let's go to the FedWatch tool, and we see that we have probabilities, current probabilities for interest rates for upcoming months. For example, for March, it's pretty much stacked already. That interest rate will not go down. It's 95%. In May, again, 69% of probabilities that interest rate will stay the same. Already pretty high probability. In June, already we have the 50% probability that we will have one shift, one step decline, a quarter point shift. And the same is for July. So probably in June, July, markets believe already that interest rate will go down. Actually, there's some uncertainty associated with that. Nobody knows the correct answer, but there's some uncertainty associated with that. So you see that these lines were going up, now these lines are moving down. Basically, that represents some weakening of yields of 30-year Treasury bonds. So bonds are growing a little bit as a result of that. So uncertainty is going away from the market to some extent. And the American dollar is declining as a result of that. So at least for the current week. And what we see now is completely is the picture confirming my words. You see that we have some pressure for American dollar. You see that USD, the American dollar index, is moving down, and you see that those lines are moving down. Okay, and if we build, for example, 30-year Treasury yield chart, so give me just a sec, I will build it. We will also see that it's moving down. So let's get back to charts, and I'm using CNBC website for that purposes. You can Google that, cnbc.com/quote/US30Y. Okay, it's also moving down. So basically, this situation points to some decline of American dollar, some easing. So this flight to safety mechanism when money was flowing into the American dollar is temporarily off the table. So what does that mean practically? Practically, that means that you're not gonna short Euro USD, GBP USD today. Gold is a different story because it has its own trend. It's a different story, but it's not. So it's kind of consolidating. It's consolidating. All right, American dollar index is under pressure, as I've said. So with that said, so we see that Euro USD is consolidating. It's not going down. If you'd like to short it, for example, so I don't think that would be a good idea, at least for this week. The same stands for GBP USD. We've been speaking about GBP USD potentially climbing with the last stream. If you remember, we've been pointing out this possibility of it climbing higher. So it's climbing higher as a result. because the same picture with the US dollar index was visible for the last week. So we've been observing the same picture, but the dynamics is pretty much flat. You see, nothing is really going on. The volumes are pretty low. Market lacks driving narratives, and we need some narratives. We need some narratives to be on during this week at least. So give me just one last second. I'll check the sound. Okay, the sound is okay. So let's go back to the presentation. We need narratives. What means narratives? So that means that the market is standing still, waiting for the new information. Uncertainty is high. So with Donald Trump being a president, with negotiations going on with Russia, in Saudi Arabia, so geopolitical tensions are stepping back a little bit, but nobody knows for sure what's going to happen, because that's a new territory, that's uncharted territory. Nobody knows for sure if any agreements will be achieved with those negotiations. So that's why market is kind of freezing in a step back and standby mode. All right, nevertheless, let's try to outline major scenarios for most assets. So let's take gold, for example. Everybody trades gold. So gold is already moving in, I think, more than 45 days of an upswing. So yeah, basically the last week was just flat. Nothing was going on whatsoever. All right, nothing was going on whatsoever. And if we take the date range, for example, here, the date range, okay, and here it's 49 daily bars, guys. That's a lot. So I think that no moves like that were visible in the past. So gold is making anomaly, okay? Because if we take a look, for example, I don't know, for even this move, oh well, that was 48 bars, okay? Then it started to move sideways. We also have some sideways move starting from the last week. We have a sideways move. After that, it was shaking a little bit. You see, the 54 bars before the correction. But basically, yeah, that was the beginning of the wave. It's February 14th, 2024. For example, another swing wave was visible here, I believe. It's also 48 bars. 49 bars is here. We're here. It's not anomaly, right? So that's not 55, that's not 60, but I think the gold is pretty much done for the upswing. Pretty much done. I think we're pretty much at the peak. That's incredibly difficult to say whether it will go down immediately. Maybe it will make the new maybe it will make the upward day, for example, after which it might be rejected and gold might go down. Something like that. I would expect something like that, because generally before moving down, market needs to retest higher prices to get the idea if volumes will support this move or not. So I think not, but this upside breakout, at least, I think might be expected, given that we have such elongated moves. I was expecting gold to go down sooner, but the market does what it does. Okay, it doesn't care about our expectations. So I would expect the gold maybe to break a little bit to the upside, and after that this move should be probably rejected, given that we were already in such elongated trading range. 49 bars move, 49 daily bars move. Okay, what else do we see? So that's also the trading range that is visible even with the help of any chart pattern, or we can build Bollinger Bands indicator. Here it's clearly visible. Let's put here 50-day Bollinger, like that. Okay, so it's standing right at the bottom, so maybe it can drive higher, so nobody knows that. Well, whatever. So let's observe the action. Gold usually has a negative correlation with the US dollar, so the weakness of the American dollar kind of supports gold a little bit. But at the same time, might not be the case this time, because gold had internal driver behind it, and it was moving up, driven by internal demand. So as a safe haven, as a protection, and that's it. So I think that gold might absolutely correct if any results of negotiations might be achieved, at least first results. So as a safe haven hedge, it might go down, because that's how markets work. Rise on the rumors, sell on the facts, right? We know this observation. So and it would perfectly fit the cyclical logic, right, of this move. Cyclical logic of this move. 49 bars, market ready for correction. Some negotiation is achieved. Some preliminary agreement for easing geopolitical tensions is achieved. So market may correct. So I would discount for that probably. I will be preparing for that scenario. So for that, building a position is extremely difficult, because you will be catching a pick. If you will go with the breakout, you absolutely can do that if you're a day trader, but you should be aware that this move might be faded at any time. I mean, it can break out, then immediately can be sold out like that. So I think you should be aware of that if you play the upside breakouts, which you can absolutely do. For example, if the market breaks this range, the intraday view probably would be the upside breakout, but you should be aware you have to protect your positions very quickly without any hesitations. So you need to maybe either take something from the table or put a stop loss to the break even, something like that. All right, so that would be my scenario for gold. I would be pursuing the higher target, then it might go down, but I won't be jumping immediately. So I will be waiting for the pullback maybe a little bit, then driving it higher. Building positions at the pullback slightly higher in order to build a short position if this move's gonna happen. So that's what I will do personally. I never chase for the first move. So if the first move will move down, so be careful guys, because volatility is increased and you might see the first pullback, which might be quite deep. But after this pullback, if you see that the market cannot follow through, that will be an excellent opportunity to join the short position after the pullback. The perfect tool for that, I think, again, is Bollinger Bands indicator, because it's very simple. It reflects volatility, unlike envelopes, for example. And if the market will move down, so it will go just like that. It will increase volatility in the first place, and then something like that will happen. All right, that's for gold. That's for gold. Let's speak Japanese yen, for example. Some statistics for Japanese yen will be published this Friday, so market is obviously awaiting the statistics. So Friday again in the morning we will have some Japanese statistics. Tokyo Core CPI, the so-called Tokyo CPI, that's also the inflation metrics, the inflation benchmark. Inflation has been higher than expected for Japan recently, so that's why Japanese yen is rising as a response to that. And it's an interesting question whether it will continue rising or not, because basically it depends on which currency are you comparing it with. So American dollar is pretty weak, but if you see what's going on right now, you see that the deviation from the resistance area, which is the value area, in other words, the combination of 20 and 50-day moving average, is not that big. So 151.72, the current low, for example, for the price action is 148.78, which is 300 pips. But if you build the daily volatility indicator, average true range indicator, you will see that volatility is worth 1.2. So multiplied by 3, we get 3.6. Well, I would say that in this case, market has not exceeded 3 daily ATRs because it's moving down, but that might not be the perfect momentum trade. Perfect momentum trade might be if the market will be maybe deeper than that a little bit, and then it will be moving down. So now I think it's kind of pretty close to the resistance and gives some probability of market getting back. But at the same time, so yen is still strong, So maybe we can compare it against the Canadian dollar again. So Canadian dollar is a little bit weaker. Again, I don't like this closeness to the resistance. It's pretty close to the resistance. You see that again. The 20-day moving average is 106.36. The low here is 104.42. Again, very close to this resistance. Not aggressive at all. So less than 3 daily volatilities, than 3 daily ATRs. Not very aggressive. I would like to see something more aggressive, and with that we would have been able to build a short position in that case. Now I think the probability of market getting back to the average, getting back to the moving average back again is greater. Gets greater. All right. So speaking of the weakness of the US dollar, so let's still try to maybe find some opportunities, whether we have opportunities or not for Japanese yen, USD/JPY. So currently we are still in the downswing, so I don't think it will be the extended move to the downside, but still we might be getting maybe some downside day within the range, within the coil, for example. I expect the market to be locked in a coil, in a short trading range, and we can, speaking of the negative sentiment for the US dollar, we can take the downside move for this coil. All right, so how do we do that? So we don't need moving averages, I think, for smaller time frames like 30-minute charts. What do we need? What do we need to do? You might not need indicators at all. But if you like, you can build indicators to get the idea of whether the market is overbought or it's close to the higher border of the range. So in that case, we can absolutely use Bollinger Bands with a 20 parameter. And if the market violates the upper border of these Bollinger Bands, that would be the first indication that it's kind of overbought a little bit. But for me, that's not enough. So I would also wait for maybe some violation of the border of the formation, maybe something like that. So I would need some upside move. After that, market might go down. So for me, other than the Bollinger Bands, I would also need to see the violation of the chart formation, as displayed here, for example, as displayed in such representation. That's just a vague chart pattern. I don't know exactly how the market will go. Maybe it will build another peak here, and then it will correct, it will pull back. So if it does so, I would not get into the short position immediately, because for me, I need some liquidity squeeze to the upside in order to build the position. How that would probably work, or it might work. So we build a trend line here, market might violate this trend line, and then it might go down, something like that. So if that happens, so I would be closely monitoring for this bullish trap, the potential bullish trap developing here. If that happens, so I will be, pursuing the short position after this false break. So that's a potential scenario for any trend, by the way. Whatever you trade, it might be crude oil, anything else which is moving down, even Tesla, if you like. So it might continue moving down. By the way, mentioning Tesla, we also have it in Exness. It's moving down, by the way, from the latest picks. By the way, that my logic might be pretty the same, just as with the Japanese yen. So you might also try to get the bullish trap situation here for Tesla, after which it may go down. So if you consider trading CFDs and stocks, for example, that might be absolutely the same logic. But don't forget that we have Nvidia earnings published after the market close tomorrow. So here it is, by the way, Nvidia. So you see it's freezing a little bit, so it's not moving anywhere. It's not moving anywhere, but it's standing right in the center of the range. Not at the bottom, not at the peak, so just in the center of the range. And technological stocks, they have been consolidating for a long time after this drop at the end of January with DeepSeek release. It has been standing inside of the range. So I don't think that it's a good opportunity. So whenever the market consolidates in such range, whenever it just stands still, so that might not be a good opportunity whatsoever at all. So speaking of crude oil, so let's talk commodities a little bit. Crude oil. I've been waiting the crude oil higher a little bit, but it reacted here exactly at the resistance area without any liquidity grab above the peak, so which would give us a little bit more reliable setup. So that has not given us any reliable setup, and that was a big drop. So that's not convenient. That's not comfortable, because when I enter the position, I prefer something, I don't know, something like initial reaction, and I enter after this initial reaction. For example, something like that, right? Downside bar, and that I might join on the next bar. So this market just collapsed precisely from the 72 area back to the 70. So nothing surprising. I think 70 is the target, so it's not going to go down lower. It should rotate around this level. So that would be the most expected behavior. So it might pull back a little bit, lean back to this level, pull back a little bit, lean back to this level, something like that. If we observe the action for crude oil, I think that losing volatility, the volatility loss might be the dominant trend right now. Pretty much in all markets, across all markets, but for crude oil it might be specifically visible. Though volatility is cyclical, so it doesn't build on the lower values for the long time, but currently you see that ATR, which is indicator of volatility, is moving down. So crude oil is losing volatility. I think that this trend is going to be continued for some time until it reaches the bottom, and then crude oil might be ready for the next bigger move. Until then, it just loses volatility, consolidates in the range around the achieved target. So basically, why am I speaking of 70 as a target? So I'm referring to the short-term energy forecast, which is built on the website of US Energy Administration. Exactly, if we build STEO forecast here, if we go here, click it here, Outlook/STEO. So speaking of medium-term and long-term forecast, we have 70 for 2025 for this year and 60 for the next year of 2026. For natural gas, situation is pretty different. So $4 per contract is expected to be achieved this year, and is already achieved, by the way. So if we talk about natural gas, I think this level has been achieved already. So we are standing right near the $4, but I think for natural gas situation might be slightly more interesting, because if we put here, for example, the 50-day Bollinger Bands indicator, the price is positioning right at the top near $4 level, which is the target area. And I think that the demand will dry up a little bit around this level. So it's extremely difficult contract to trade because it's moving with gaps. It's messy. It has a lot of noise within a day. And keeping that in mind, so it's extremely difficult to trade it. Because you see these gaps and all that, so it's extremely difficult to trade. But if you still trade it, I think that might be quite interesting opportunity. So for example, if it reaches some point outside of the Bollinger, if it jumps higher, so it might represent some rejection of this level. So you can find a setup anywhere here to the short side. So I'll be monitoring for this position to the short side because it has already achieved the target area. Seasonally, it comes to the end of the injection period. Withdrawal period, so which is winter. Then the injection period will start with the beginning of the next contract. I mean futures contract, because they have expirations, certain expirations. For example, end of May, beginning of April. So that's the start of the new contract, and it might plummet as the new contract will start to be trading. So weather is a little bit colder than normal in the United States, where this natural gas contract is traded. That's NYMEX, and NG contract is traded within the New York Mercantile Exchange. So that represents the so-called So that's an NG contract, and there are two types of contracts. The one is with the one is representing the one region, and another is representing another region. So so-called Permian region. These are different futures, and here we have another tradable contract, which we see in Exness as NG or XNG USD. So most probably you will see it under the ticker of XNG USD. All right, so enough with natural gas. So I don't know. I don't think that many people are trading that. But other than that, I think there are lots of opportunities on different commodity markets, which we don't have in Exness, but they are not so liquid. For example, coffee or cotton, but still we have gold and silver. You can still trade gold and silver. So that's why let's go through silver, XAGUSD. We've been speaking about the possibility of it driving down a little bit from the problematic area of 32. So if you've been on our previous streams, you remember that we've been referring to this level as problematic area. Problematic area, okay. So, and that's exactly what we see right now. Market is bouncing off the problematic area. By the way, guys, if you want, you can subscribe to my TradingView account, which I use for building some ideas. So let me just show you. I go there under the Stanislav Bernukhov slash, it's not slash, the line Exness account. So give me just a second, I will show you. So if you like, you can track it here. So I put some ideas here. So here it is. Here's my profile, Stanislav Bernukhov Exness, and I have ideas here. So for example, I put pretty much all the ideas which we discuss here in TradingView. Natural gas test the key level. It is here, by the way. It is here. So you see that the swing trading ideas here. We had some scenarios for Chinese stocks, for example, Baidu again testing the higher level. We also had, by the way, the same silver in the problematic zone, right? So that's the exact rejection area was slightly higher, but the scenario is still intact. The ETH situation is just the same. ETH has been consolidating for longer than expected, but finally we see it plummeting lower. So, you know, building the idea is not just about the selling it and placing a stop loss, because sometimes it can chop around your entry point. You might maybe need to enter later again, but the general logic, the general trading logic which we're discussing unfolds basically on the 1 or 2 weeks period. So if you want, you can subscribe and check out my TradingView. So I put all the ideas which we discussed there. All right, what else do we have? So let's speak a little bit of other than US dollar related currency pairs. For example, let's speak GBP JPY, British pound versus Japanese yen. So again, we see it moving down, but it's consolidating. So GBP looks stronger, even though the yen is pretty strong currency. The GBP looks pretty stronger. But I think maybe the better idea would be combine GBP against the weak currency, the weakening currency, which is the US dollar right now. It's standing right above the support zone, which is good, and we are located inside of the upswing. Inside of the upswing, so it's pretty difficult maybe to enter right now. Maybe you can give market a couple of days of consolidation more. For example, it closes today, closes tomorrow, closes the day after tomorrow, and then you can think of entering the position to the upside. So I think that situation might represent a pretty decent opportunity with low risk and extended reward. If it doesn't pull back to the support soon, if it goes in the coil for a couple of days, so it has the increased probability of breaking. I think specifically on Friday that would be expected because of the PCE publication, personal consumption expenditure publication, that would be absolutely expected on Friday. All right, what else interesting do we have? We had not so long ago the discussion about Mexican peso. Okay, let me remove some of the tabs, which I don't need. Mexican peso, is it interesting or not? So I've got some questions about Mexican peso because of political situation on the Mexican border and the United States. We have this gap, then it pulled back. You see, that's absolutely horrible situation. It's difficult to find the exact moment of market getting out of the range, but in case it gets out of the range, that might represent an opportunity. For example, it goes higher, closes above the Bollinger, then next day, on the next day, you can think of buying USD against that. But you see that USD is not very strong right now, given that the sentiment is slightly softening across the board. So it's not pushing it higher yet. It's not pushing it higher yet, but we don't know about the future. It's not pushing it yet, it's just standing still. That works like that. All right, what else interesting do we have? USD versus Canadian dollar. It's the same situation. So Canadian dollar has been expanding against the US dollar. Now it's at the bottom of the Bollinger, at the 50-day Bollinger. So, and it's starting to move up a little bit. It's pretty not very strong, but I think it's building, it might be building the upswing. And it looks more like a trading range. But it has weakness against the American dollar, even though the American dollar also pretty weak currency. So that's why it's even weaker than the American dollar. So for that purpose, of course, I think the best solution would be to trade Canadian dollar versus yen, which is the stronger currency right now. Just like we've been speaking about USD JPY. So Canadian versus yen. This situation is might be pretty interesting because it's just consolidating right above or close to the border of the formation. And if it will be broken today, for example, I think the situation might be pretty weak for this currency pair. It might fail. So I'll be monitoring closely for this failure, for the potential failure of this breakout. Though, don't be fooled by that. Sometimes breakouts are genuine. Sometimes sentiment shifts quickly. Sometimes they are genuine, and market can quickly shift above this area. Currently, that's not happening. So we see that the price just leaning to the upper border of the range. But if it will break, so that might be the interesting moment. You can monitor for the situation, and I would personally expect failure with this breakout because Canadian dollar is pretty weak, yen is pretty strong currency, but that depends. If yen weakens, so we can also see this breakout, expanding and developing. Bitcoin is an interesting story right now because it's collapsing. By the way, it's collapsing in the way we've expected with you guys. Okay, so that was, you remember, we're drawing this scenario so far, and that's exactly what's happening. It goes even deeper than we expected, even deeper. Now it's a lot of liquidations have been recorded in a lot of exchanges. Volumes were really dead. This market was dead for pretty much entire February. Volumes were at the historical low, and the situation was close to the one visible in May 2021. There was the same situation. So let's scroll it back. I don't know if it's visible or not. May 2000, it's not visible here. All right, so you can believe me. It was the same situation after the initial liquidation break from the peak. It was not moving at all for the 1.5 months. The same situation. Volatility has broken only the day before yesterday. And yesterday's action, so today's action, basically that's tonight's action, was also pretty aggressive. So minus 4% for Bitcoin. Everything was pretty much going down, including ETH, Solana. I think Solana got the biggest hit, but ETH also is one of the biggest losers here. It had reached 2,350, sorry. So I would say that this is an expected thing. It's a long trading range. So traders hate such ranges, just absolutely hate them because that's a choppy market. That means low volume, low tempo, low price action, low everything. So if you are a swing trader, that's a nightmare for you. Nightmare meaning that you expected to get being stopped out in every entry that you make. But finally volatility is shaking a little bit, so maybe some bigger extended moves might be visible here. So if you're a swing trader, maybe that might be good news for you. Maybe not, let's see. But I think that's generally good because moving markets are better than dead markets. So if we have moving market for Bitcoin, so it had reached the new bottom. So if we would display the responsive action, responsive activity, for example, the upside bar or something like that, so we can think of getting inside of the long position because the situation might be much stronger in this case. We can build a long position, we can hold it for maybe 5-7 days until it reaches 100,000 and more, and that might represent pretty decent asymmetrical trading opportunity with low risk and extended reward. So that's for Bitcoin. So I won't be short in Bitcoin right now, so I will be expecting some, pullback action here, because I don't believe that it will move down necessarily. So because let me show you some chart. It's called lookintobitcoin.com, which is now Bitcoin Magazine Pro, and if we go to charts here, there is so-called hodl wave indicator, 1 year hodl wave indicator. You see the orange line moving down. That's the so-called hodl wave, meaning that there are a lot of wallets, big wallets, unloading Bitcoin, but there is a nuance. They tend to unload it on a rising price. So the price usually goes higher when we see the unloading pattern. Exactly like it was here, for example. Here, so usually the orange line moving down is associated with the rising price. Not all the time, not always. But in many cases, the distribution phase, which means that the big wallets are unloading the position, corresponds with spikes to the upside because the supply generally is standing at the higher prices, not at the low price. They don't dump in the market all they have. Basically, this is a leverage, unleveraging. So what we see is deleveraging. So speculators which have been with the leverage, which have been betting on the big growth, on the sharp growth, they are unloading their positions. They're deleveraging. Big wallets, on the other hand, whales, if you will, so probably they are standing still. They are not moving their capital. So and probably they will do so when the Bitcoin will reach the higher prices here. So that's why I would expect the new wave to appear. So we don't know that yet, if that's gonna appear just tomorrow, day after tomorrow. Maybe it will need to get on lower prices somehow, maybe building consolidation or a base at the bottom, and after that it might take off. So keep patience here. We need to be patient because after such drop in volumes, market needs to have some time to restore the activity, to restore the volume, to restore the participation. So that's for Bitcoin. So basically not a good month for Bitcoin for traders, but if you trade Bitcoin, I think maybe a week or so opportunities may start to pop up, arise maybe in the beginning of March, I don't know. But hopefully you haven't lost a lot of money trading Bitcoin this year, because I mean this year, right? Because there were liquidation at the first place, then it was market locking in a range in the second place. What else do we have? Stock indices for the United States, for example. S&P 500 is moving down, getting back to the average, getting back to the combination between 20 and 50-day moving average. Is still in an uptrend, because if we build here 200-day moving average indicator, it's still in an uptrend, confirmed uptrend, so it's still far above the 200-day moving average, just like that. So it's not moving down yet, but it's not moving up either, so it's just consolidating. The same is with Nasdaq. Nasdaq is standing at the right, slightly below the combination of 20 and 50-day moving average, the sideways, the choppy market, but overall the overall trend is located where? It's located to the upside. Price is just above the 200-day moving average. So it's still a bullish market, though it might not be that active market, but that's still a bullish market. It's not yet a bearish market. By the way, if you want to grasp or assess the sentiment for stock market, you can go to Fear and Greed Index. So let me just show you really quickly how I do that. So it's basically CNN's Fear and Greed Index. So we are in a fear territory here. You can go to CNN, Google CNN Fear and Greed Index. And there are two parameters which are important for us. It's stock price strength and breadth. Strength means that's how many stocks are showing the new high. Basically, it shows the number of stocks at the New York Stock Exchange at 52 weeks highs compared to those of 52 weeks lows. When there are many more highs than lows, that's a bullish sign and signals greed. We don't have greed yet. We have neutrality. Here, that's even extreme fear. I would say it's neutral, but the indicator says it's extreme fear. Stock's price breadth is in a fear territory. It's below the medium line here because that's a number of stocks growing versus the number of stocks declining too. A low or a negative indicator is a bearish sign. So we are in a fear, not extreme fear, but in a fear territory here. By the way, the same assessment we can make if you trade crypto, we can make for crypto on the coinmarketcap.com. So that's basically one of the largest aggregators of information for crypto. We have here again fear and greed indicator. It's in the fear territory, not the extreme fear. Here is the extreme fear. So that's the underwater zone. So now it's 29, which is pretty close, but we are not there yet. So I think that means that market can continue moving lower. So it has the potential of moving even lower than that. We are in the fear territory, not extreme fear yet. All right, so now it's 29. So you see where we are in close to the fear, but not extreme fear. So meaning that if that would be the extreme fear, market will probably collapse. Market will probably retrace because extreme fear means that it's already at the bottom axis or the culmination of the move. So with that, you can expect the market to continue bouncing higher, but we're not there yet. We're not there yet. All right, guys, I think that's, pretty much it for now. So we've covered all assets which we're going to. So let's sum it up a little bit, what we have for this week. Thursday, it's going to be GDP, the second estimate for the United States. Friday is Tokyo CPI for Japanese yen, so that's important inflation benchmark. PCE index publication for the United States again on Friday. NVIDIA publication after the market close on Wednesday. That's important for all stocks and cryptocurrencies. What else? So I think that's pretty much it for this week. Friday is the most important day, I think, because it's inflation. Inflation is a important benchmark for the Fed, for the Federal Reserve. Currently, American dollar is slightly under pressure because expectations are softening a little bit about the interest rate decline in June and July. So it's expected to go down. Interest rate is expected to go down in June already, July, and maybe lower, and maybe further, I mean. So probably short in Euro USD, GBP USD is not a good idea for this week. So you may supposed to play on the long side. Japanese yen is strengthening too. Canadian dollar is the weakest currency probably. So Canadian versus JPY might be some short potentially. USD JPY might be some short potentially. Other than that, we have crude oil consolidating around 70, losing volatility. Not expecting much from this market. Maybe it can bounce later from 70 to the upside, but currently we are not there yet. Gold is close to the peak probably because it's already 49 days in the 49 days swing, so it might test the higher level, make a bullish trap, and be careful about that. After this bullish trap, it can continue sliding down. So I guess that's it for Bitcoin. By the way, Bitcoin is driven down, maybe can find some bottom, but not immediately, so be careful about that. Be very patient and find only the best setup. But I think Bitcoin will be long soon. It's not going to collapse. It will be long soon because all indicators point to the increased participation of large participants of the market. We have ETFs now, we have institutional demand, we have big wallets that are unloading their positions on the higher prices. So supply is not going to dump their Bitcoins right now at current price at 89,000 right now, 90,000, something like that. They're not unloading position at this price. So I think Bitcoin is going to go higher. Currently what we see is liquidation. So speculators are unloading their positions. Leverage trades, speculators are unloading their positions. So that's what we see for Bitcoin. So that's why that's a normal and natural situation of the market inside of every trend. Every trend works like that. So it goes higher, extreme greed, everybody is in leverage, then it's deleveraging, is moving down, liquidating those guys, then again finds the new buyer or finds the new wave of buying from the bottom. So I guess that's it. So let's compare it next week. So let's see what worked, what didn't work. Come next Tuesday. So we'll be glad to see you on the stream. Good luck and have a good trading week ahead. Manage risk and trade well.